Hello, welcome back. And this week we are finally outperforming all three indices, so Dow Jones, SPY, and NASDAQ. This week was still a little rough, so we did lose money this week. However, we compared to what the other indices lost, we did really, really well. So let's go on. So total performance. So basically, it took a little bit of a hit on Monday, and we basically just recovered that, and then just did a slow decrease. The slow decrease. These were the days when it really fell. So that was pretty much here. You can see again. This is with the compounding, and you can see here that it's basically it just slows down here too. So comparison from last week we earned quite a lot. We earned 1%, so that's quite a lot. This week we lost a bit less than a 1%. We covered a good amount here and then just slowly lost. Now Nasdaq and almost I think they lost around the negative 1.7% area. So QQQ. So yeah, this is a dive I'm talking about that happened over the tech earnings and all that. And so basically, we didn't really even get affected by that. It was just on Monday, which kind of went weirdly. I was expecting a fall, which did happen, but I just anticipated it a bit too early. And then recovered a bit here, so we're actually outperforming by a little bit. Here we're outperforming by a bunch, and then today it recovered and we just stayed stable. So really, this week we lost 0.7, and Nasdaq lost 1.6. Outperformed 60%, so that's quite good. So overall, we went up in Nasdaq by 3.3%, so that's good. And then overall, so if you would have put in your money since I started, we would be 1.33% overall, and Nasdaq would be just 0.4% under. So yeah. Compares so SPY did not have as good as a recovery here, and you can see that our gap of outperformance is quite larger. Right. So yeah, so negative 0.72. We didn't lose as much. However, we only outperformed 40% of the days. So it's all right. The point is that we didn't get that big losing day. That was the whole point. So overall, we decreased in 2% here. Now, if you would have put in your money with SPY, you'd be at 0.35 basically, and HR Capital would be almost around more than four times more. So Dow Jones has been sliding, really, just sliding. This is the one we're most outperforming, really. It's just been sliding. So 0.72 this week. Surprisingly, Dow Jones did not lose as much, I guess, because of last week where it lost a lot. We still outperformed 60% of days here, so we did lose a 3.3% or a 2.7% in percentage from last week for the overall days, but it's okay. And Dow Jones, this is the first index that you would basically be neutral, but you'd still be negative. Since if you would have put in the money since the 27th, I'm pretty sure. So, or 23rd, I'm not sure, but this is the only one that's gone negative right now at the end of the week. So here you have all three put together. Really, Nasdaq took the biggest slide. However, due to its past gains, really it still remained on top of all of them. SPY in the middle, and then you got Dow lowest, which is kind of what you normally expect. Now, if there's more falling coming this week with the election and the Fed, we could expect Nasdaq to be one of the lowest here. Maybe Dow could also fall quite a bit with SPY, but we'll see. So this is overall. Really, these were like the last 1, 2, 3, 4, 5. So yeah, basically this day we lost surprisingly. I was like, that's kind of weird because I was expecting this gain the next day. So I was like, whatever, it is what it is. So we regained that, and then it just stayed neutral basically. So here we're each day. So Monday we did all right. Outperformed Nasdaq and not the others, but it's okay. The next day, this is the big loss, and I regained it. So I was pretty surprised by this, considering the tech move upwards, and then later on the next day just we went down, and then we earned a bunch. And then the fourth day, that was the crashing day. So that day we barely lost, so that's good. And then on Friday we just didn't pick up on these gains, but it's okay because like we didn't lose as much here. Here we gained, here we lost a bit more, and in the end we ended outperforming this week by quite a lot on all of them, or except Dow Jones actually, right? Because if you go back, Dow Jones was the only one so Dow Jones was the only one that outperformed us this week. Yeah, okay. So let's go over here. Let's see. So green day, so yeah, 18 green days, 12 red days. So we increased still. I think last week was 15.10 around there. So we're still increasing our green and red. It's kind of keeping this difference here kind of stable, just increasing like that. Now, really, if the red days increase, I'm not worrying that much. It's the only important thing is if we're outperforming. So, if you still lose money, but you have to think, well, we're losing less money. That's the important part. So profitable trades, we decreased 2%. That was only because of one. So really, it's basically the same. So here we got the mean. So the means, we increased by 0.01 and decreased by 0.01. So that's good. The standard deviation, so we also decreased it by 0.01. So decreasing standard deviations is good. Now SPY increased it quite a bit, so 0.03 and 0.12, so that was the negative day. So this one decreased quite a bit, and this one decreased also. So the standard deviation grew also, so then 0.62 compared to 0.54. So our means, now the mean divisions here are quite similar. And so really our gain should be around here to be the same. Now you want to think, the point of this division here is just to think, should it be equal? You should either be equal or greater than this number, right? If it's greater, that means that your average gain is more than your average loss, so then it would be a high number. So then you want it to be greater than this number. It's also fine if it's equal. If it's equal to it, then you're basically, that means that you are gaining and losing the same amount as the market in a way. But not by let's say if you're 3x, right? Well, if you're 3x, you're gonna lose 3x and lose 3x, but you would be the same as the market. What I'm trying to say here is that we're winning and losing the correct amounts. So, you would want to lose less, making this number greater, which is why you want it also to be greater. So if it's greater or equal, then that's good. And then these numbers don't really matter too much because it would just increase our loss or decrease our win. So we want it to be either equal or greater. Now the other important aspect is the standard deviation. So if you're in the 3x leverage, it would be the same, but your standard deviation would be 3x. And so that kind of is what makes it a bit unattractive, is that you're very volatile. And so those volatilities can make it to lose a lot of your portfolio, and then to regain it takes a lot of time. Now our standard deviation is never really going to be the same as SPY's. As if it were to be the same, that means that you would have to be outperforming with no leverage, and that's pretty hard. And so if we have leverage, it's going to have a higher standard deviation because it's working on the mean. And so basically what happening here is our difference in our difference from last week. Let me quick check. So this is 0.067, right? So this is our difference in means, so it's basically the same, even a bit higher. But last week you can see it was a lot higher. However, doing this to be higher, you'd have a higher standard deviation, and we want to have a lower standard deviation. You would rather have a lower standard deviation with a lower difference than a higher standard deviation with a higher difference, because if you have a higher difference, that means that, well, you're winning more than you're losing. However, you're risking more, and we want to risk less and still earn the same as the market at least. And so here we're earning even a bit more, very little more, but our risk has decreased quite a bit. Now, really, this, if you just look at this, right, then you're like, well, why would I go in this, right? You're outperforming, but you have a pretty much a 61% greater risk level. But then you have to look back at the charts, right? It doesn't tell you the full story because it's just a mean. So if you look at the charts of our performance compared to all the other ones, you have to have all these three things in consideration. Let's go back here. So right here. So this part is kind of not great, obviously, but here we're right here. So it's very similar, right? They're all close to each other, and this is pretty much all been touching at one certain point, and also here and here, except really this area when it was recovering. But we have a higher risk. I think it's kind of skewed because of all this, right? So if you would have taken this part out, which is, I don't think it's going to re-happen again, but if basically you just take out this part, then we go over here and look at it, well, you can see, okay, we're outperforming, but your risk it's almost the same as this, and you're still outperforming, right? So you want to have more data here, obviously. However much days are here, I think a bit more than a month is not long enough. You'd probably want a year or two. And when you have 12 of these stacked up against each other, then you see, okay, your risk is higher, but you're outperforming by the same risk, let's say. Then that's good, right? And you're also not picking up on the losses as much, right? So this is what I mean. You're not picking up on the losses here, and also here. Now this part is messing it up because here I was holding mostly a short, and that's what I'm not going to do anymore. So really, when I don't do this, then you basically don't really pick up the losses that much. Now you would also have to pick up on the gain. So like here we didn't really get it. So really you need more data to clear stuff out. But the idea is to have a standard deviation that is not too high, but you're still outperforming, right? And a close or greater difference, I mean. So, and that's where we are. So this week would be quite good if we just stayed here and continued either being stable, outperforming, and stayed here in this level. That's really impressive because you're not even 2xing yourself. You're just going 0.6%, and your means are basically you're winning and losing either the same or greater amount on both sides of your losses. So you're controlling your losses really well, at the same way as the market or even better. And then your standard deviation is just a little bit great. It's just a 0.6 greater. So that's impressive. You would also probably calculate your Sharpe ratio when you're done with that, and you would use that as another method, but we'll see. Anyway, so mean transactions decreased quite a bit. That's good. It's all right. It's good. Mean day trade, so that also decreased below 1, just due to some holds, small holds. Transaction history, you can see here this week, we hit the 2s, 1s, or 1, 2, 3, 4, 5. So yeah, 1, 0s, 1s, and then 2, 2. So these are the day trades, really. That's it. Not much. Only 2 cents this week, so that's good. Probably it's gonna range between 2 and 4 cents, I bet. And yeah, so the overall return is 1.33. Decreased a bit, but it's gonna be a volatile week. I really expect it either way to go up or down. Due to us holding 80% SPY, I hope we're neutral. But this week election and Fed, that's an election been 4 years, and it's quite a consequential election, and so it's going to be last week was volatile. It was pretty volatile due to the earnings and all that. And now we got this, so I'm expect volatility, and we'll see how it goes either way. All right, see you next week.